Welcome back to another week of madness, man. It's been quite the show in the equities and ETFs this week, and now we're kind of bouncing some volatility in. We do have contract rolls on the futures side, and that's kind of playing a little bit of havoc with the market in general. But we've kind of seen this before, and we know that it does play in equities, and we can kind of use this as an advantage to scalp volatility. But then swing traders get kind of beat up in this kind of market sometimes. So I think next week we'll see some better plays. But anyway, welcome back. And, of course, we ask, like, subscribe, tell your friends, because we're doing what we can to help everybody. Live today, we have Mr. Howard Greenberg filling in for Matthew Tuttle. Matthew Tuttle's out traveling today, so he'll be out doing some field market research, we'll call it. That way you can write that off on his taxes. How you doing, man?
I'm doing great, Jeremy. Thanks for having me. Always love to join you here.
Heck yeah, man. We have a blast, and we get to sometimes throw a little shade at Kramer. He came out and tweeted this morning. He's like, yeah, I'm going to take a look at NVIDIA. And I'm like, I already thought about that yesterday, man.
Yeah, NVIDIA's one, it looks like a big head and shoulders to me still. And I think you and I heard from Ron Williams there, you and I have about the same target of about 117, am I hearing?
Yeah, I think so. And let me get the chart up here. We've been playing with NVIDIA for forever. I mean, we just love scalping this thing. It's such an easy chart. Rounding tops, I never short until they break the range bar. This is the range bar we look to break, and we broke it today. And we're playing with the 127 pivot here, 127.90 is where I have it at. If we smoke that with some a little bit more oomph, so to speak, we could see it hit the liquidity zone. And if the liquidity zone breaks down, then yeah, that 117 is my ultimate goal to get back to square one for a good entry. It's about half back on this whole thing, high to low, if you think about it. It makes obvious sense there. Kramer was trying to say, should we buy it now? And I'm just like, that's going to create a Kramer bar.
Yeah. That looks to me like a nice little head and shoulders too. If you take a look at that too.
At the left, the head, the right.
On Quasar is that's a head and shoulders 200-day MA below it. It's respected that. I'd love to target exactly at the 200-day MA, but man, I think it's going to catch just a little above. If you go back and look to your left, you see it just misses it. It doesn't seem to get all the way down there for a while. If you go back all the way to about middle of last year, I want to say, you can see it tried a few times to get down there, but it didn't quite make it. So that's why I love your 117 call there.
It always plays nice. And, it's been part of a base of our previous measured move. I mean, we're really good at finding price targets, guys. I'm sorry. Yeah, we do it right. And I remember back when we were chatting about it in the QM chat there, we were working through this when it was hitting that danger zone. And I'm like, yeah, 102, watch for a bounce back to 107. And I think Big B played a nice scalp on that one. And then, of course, it just started trending and ripping faces off. And ever since, we've been just stacking measure move blocks. Well, we hit the wall and we had to come down sometime. The big elephant in the room is eventually this move gets met. Eventually. That's huge, man. 197.80 up here is where that would be. If you take this whole trend as a primary, that's where it ends up. I think we're going to have to wait a little while on that. I think Kramer might have jumped the gun saying, should we buy it here? But then again, if we end up with a quick liquidity grab, usually he's pretty good at calling those out. We get a quick snap back up to resistance here, maybe a quick push to 132 and then a quick sell-off back to that pivot. And I would love to see that kind of volatility because then we can get some implied volatility in the mix and start selling some covered calls, cash-covered puts, and wheeling this thing. Same goes for the leveraged ETF. Matthew's product himself, that NVDX, is fun to sell some liquidity on, or fun to sell some premium on. And I took a little bit of a beating on my entry on that selling puts, but I think I can probably stand to sell some more pretty soon here, just looking at the implied volatility getting freaked out on this thing. So that could be a nice play for a good wheel trade entry at some point. For now, scalp the volatility. You can see that the short term here, we've made a 1-for-1 down already, and we found some liquidity here just above our 127.90 pivot. Play nice. We'll get there. Just be calm and patient. Relax. Let it do its thing. It'll give us the market that we want. A few other chips come into play, and AMD has been just a fruitful short for a while here. But what's next on the agenda here? Can we see the chips start to make a little rebound here? That's kind of the theme that people are leading into this week and going into next week, is they're kind of looking at the chips and being, I'm a little hungry here. But pay attention. We're right at about the previous low here, 121.80. It's getting close. And we could see a quick little liquidity grab, I'm thinking, right there, and then maybe finish this move. But it's kind of right in that half a mark here on a measured move down. I got this number here. That was easy. This one's not so easy. This can actually make anywhere in this range. It can find liquidity and reverse there. So if you're short in AMD, be nimble, because I think this thing could give us a quick bounce at a, just a push button notice, so to speak. So we'll wait and see what the market makers want to say about that.
Yeah, without a doubt. They've been getting beat up. There's a lot of talk that they don't have, really, they're not part of this generative AI chip sort of area, so that they're the losers in this. So we'll see how that plays out. It does look like it's going to complete that full measured move down to me. Because we're seeing the other ones, they're not getting the bounce. So it'll be interesting. And we got Micron today coming up for earnings.
Right.
MU. I think that would be the impotence here to kind of watch what do we get from that, because if they get good earnings and bounce, then you'll see everybody running to find out what's the next one. We've seen Marvell already go. We've seen AVGO, of course, just blast off. People are all looking at what is the next chip to do it. Everybody knows AMD, so it gets in people's mouths. Once you start to get into some of the other ones, people don't know it as well. So that's what you got to worry about with it. But yeah, Micron, I'm fairly bearish here. I think that it got rejected by that 200-day hard. And if I was a betting man today, I would be looking at either selling some call premium, there's some implied volatility there above the mark here for this week's expiry, or buying some puts down below, maybe a put debit spread type thing.
Yeah, it's an old liquidity zone here too, so it was bound to reject this. Typically, when it fails the third breakout, I mean, you can see it's going right back down. It's likely to do it again and at least trace half. So a bear target short term would be like 103. And, in the meantime, we're rejecting 110 pretty cleanly here. So I think we got a good shot at breaking down. But then again, I mean, we do have earnings, and we know where the range can be. I have an old self-proclaimed analyst target up here at 120. This was way back when we were looking at these measured moves back in here, back in last year. And it, had a runaway earnings call on that.
Yeah.
And just ripped a face off to the upside. So can it happen again? I don't want to say that people are trying to anticipate it, but that's what pushes that implied volatility up. Hopes and dreams don't pay the bills, but premium sure does a nice job of it. So
yeah, and that's part of the thing is I do think that there's been a bullish run up here the last 4 or 5 days because of what AVGO did and people trying to catch up to Broadcom and Marvell.
Right.
But it looks like they're in line for a below consensus quarterly outlook is the quote that I saw today. Those disappointments have been bad. I was on the wrong side of Microsoft's earnings, and I can tell you these companies, after we see 3 or 4 successes, and that's more what my thesis on this is. We saw Marvell, we saw Broadcom, they just took off. We know what NVIDIA did at earnings. And people are like, okay, guess what's coming next, baby? Micron's the next one to do it. But those people that bought in at that, what was it, like 94 level, they'll get real nervous if there's not a good beat on earnings.
Agreed. And that's where the liquidity base is right there, $93, $94. I mean, it's obvious. This is a pretty much a price channel.
That's what I'm looking at. It might get that quick bump back up to that liquidity, and I think it rejects there real hard. You might get that breakthrough like you saw back at the beginning of November,
Right.
and then but you saw that retracement, and I think you see the same type of run.
Good point. Yeah, that's going to be fun. It's not a wait and see. It's know where the limits are and trade the limit range. And then if it gets a quick liquidity drop and they get sold right into that earnings call here, I'd see support right around here. And if it breaks that, just walk away. Don't do anything with it. But if it bounces right there, scalp that crap, man.
Yeah, same thing. If it breaks 114, don't get me wrong. I think you do go straight to your 120.
That's a pretty easy move.
You know what I mean? Is that's what it's going to do. But it's got to break 114. It couldn't on its last 3 tries.
Yeah, that third time's usually the charm, and if it isn't the charm, well, it's the target. So
yeah, absolutely.
We'll get there. We'll see what happens with this thing. It's going to be a fun earnings call for sure. To say the least about Apple, man, we've been talking about Apple. We've been bullish on Apple, and it's paying off, baby. It hit that half measure move target today, and absolutely, my profit is taken, guys. Can it shoot that move to 282? Sure as hell can. We'll wait and see. But for now, all my short-term stuff is off the books. Long-term stuff, I have a little bit left. I'm rolling some stuff out into March expiration, and I think I want to wait and see where this goes. If it breaks this with some force here, pretty easy shot to that 182 full measure move target. Apple's got the kind of strength to do that kind of stuff, and it doesn't always happen in like a day or two. I looked at the weekly chart and I was pointing this out. These are big bars on the weeklies. It takes a little bit of money to make Apple move. So, you got to be patient with it. It does make some pretty big moves, but, we build a measured move on a weekly chart with this. You got to remind yourself, these are weekly candles. I'm going to need some time on this. So I like to go as far out in time as I can cost effectively with my options positions. And those debit spreads are just glorious when you give them the right amount of time. You can scalp the short-term stuff if you want to do a couple yellows. Just be very tactful and be ready to roll them if you can. I know earlier in the week, I put a message or learned out to you. It was the end of last week, where I rolled some of my PayPal position into the next expiration and rolled it up and out and bought myself a bunch more time for free, basically.
Yeah.
And with that same scenario, we're pulling back a little bit here. We're testing support on PayPal just to kind of give you a comparison. Being able to be nimble in your options trades, especially on debit spreads like that, is a must. These were kind of a YOLO entry for me. I'm looking for 100% or better return on these with very minimal risk. Paid 4 cents a contract on those splits. They're $5 wide. Even if I lose it all, I'm not going to lose much. But if I gain it, I'm going to gain a hell of a lot. So it's a YOLO.
Yeah, I actually sold a couple of mine today because I wasn't able to roll it. I didn't get a fill on my roll when you rolled. And the 120, 125 hit 8 cents this morning.
I put the limit.
It actually hit 10 cents.
Yeah.
So I took a little bit of profit at 8 cents on about a quarter of them to kind of get my entry covered.
That's 100%.
Playing with house money.
Exactly.
And now I'll look to roll them a little bit later today, see what I can find there and do it. So yeah, just a little different. I got unlucky. By the time I saw your message to me, I just didn't get a fill.
Right.
You know how Robinhood is.
When I put that out,
I didn't have them where they were. And this morning I looked up and I was like, wait a second, I don't have much open at all right now. I'm a little weary right now. I'm not holding all that much long. I do think we've got, NVIDIA leads me to believe that we have that downside coming that we've sort of all been looking for.
Yeah.
I don't know if you saw today, S&P advanced decline, has been in a negative for 11 days. That's the longest since 1999. The S&P, the Dow, if it goes negative today, which it is so far, will break, basically its all-time record for amount of days in a row down. So,
right.
We've all been sort of looking for this. So I've got some cash sitting on the sidelines waiting, for like that entrance on NVIDIA and some of these others that I want to have. For one, a scalp, and for two, more into a longer-term trade.
Absolutely. Playing the volatility week. That's the bottom line. And then next week, I think we'll see some better swings emerge. But this week, the swing traders are getting beat up a little bit. So just be patient. Don't jump the gun on anything this week unless it's a really good buy. Be very cautious about what you jump into on this week. But next week, I think we're going to see some follow through with either we continue and run those measured moves to the bull side, or we start to come back and test reality a little bit, because we are a little bit extended on a lot of things here. So, definitely.
I will warn that next week liquidity gets real low, so you got to be very wary trading options the week of Christmas. That Santa rally doesn't start to the 26th, so everybody remember that. That is the day of those expiries. So be a little wary there. Everyone's talking about it, everyone's saying it, and people don't usually realize that, number one, it runs from the 26th to the 7th. It isn't a pre-Christmas rally. It is Santa drops you a present off. So just, some certain things. And, I think the other problem is all the Fed could do is disappoint tomorrow, right?
Yep.
Everybody's baked in for a quarter point. I mean, let's just face it. Everybody's baked in. If you tell me if we get a quarter point hike, drop tomorrow, and we take off, then I give up, because I want to know who's been watching what.
Exactly. And then, you go and you find these, if you look at the January 17th expiration, it is a little bit pricey. It's got an edge that's a little further out than it should be. There's a reason for that. The Santa rally is kind of baked in, and the Fed decision tomorrow is kind of playing with that too. I think after tomorrow, we might see an opportunity to play with some of those January 17th expiration options to make some quick swings into next week. But you've got to be very nimble with them, because the implied volatility is going to fade rapidly on those. You got to time that. Hopefully you find your entry middle of the day or towards the end of the day, where that's all tapered off after the Fed speak. It kind of ends up that way, or just wait another day. You're not going to really lose much.
Too, I love that idea of where the expirations for monthlies and next month at the 17th, because it's before the inauguration. So if we do get a sell the news event, this is perfect. You'll get all the hype. So, I will say for you permabulls out there, I am not one of them. I'm not a contrarian, but I tend to play the market in front of me.
Right. Same.
When you watch Bitcoin go from, 70 to 30 all the time, and from 20 to 6, you get to learn that you play both sides of it. I love it, because I do think you'll see some sell the news when the inauguration comes, and then we'll take off when things, the news cycle is hitting in different waves, right?
Yeah.
And right now, all the hype is when somebody gets announced. If it's a cabinet position or a policy change, it gets the hype. We're going to see that up to the inauguration, then we'll get to sell the news, because nothing happens the first 2 days.
Exactly. It just floats.
As much as DJT is saying he's going to change the world on the 20th, it takes a few weeks for things to work through Congress and the Senate, for sure. It takes months.
Exactly.
As someone who lives in that world here in DC, so be careful there. And then when it does happen, then when the actual policy comes out and they pass, X rule for crypto or X rule, and the FTC allows the first big merger to go through, that's when you really take off.
Absolutely. And that's why it's going to be a good sell the rumor or not necessarily sell the rumor, sell just before the news breaks. 17th expiration.
Sell them the actual news day. So everyone's thinking, or planning that, January 20th we take off. It's sort of like, if you remember, I've been yelling at everybody about Bitcoin for the last 9 months, right? Everybody that's been asking me, the halving came, why aren't we just taking off? And what did I say? It takes 6 to 8 months for that to catch up.
Yep.
It doesn't happen overnight, and it's usually a drop in that time right after every halving, because of the hype. Everyone gets excited and the newbies get in, and then they go, wait a second, we didn't go from 70 to 100, I'm out. And then it drops down, and then sure enough, after 8 months, what happens is there's an inevitable drain on liquidity, and boom.
Exactly. And then we had that little snap in liquidity where they sold it short to pile it down, and all of a sudden rip right back to the upside. That was awesome. I love being able to help with that.
It's been crazy. It was a little crazy today. The other way, you got a short squeeze that took us up.
Yeah.
And we were real close. We were within probably $200 of seeing a squeeze that would have sent us right to 110.
Yeah.
There was about $250 million of short liquidations at that 108,650 area that I was pointing out on Quasar this morning, and it got just below it, and then the Bears took over.
Yeah, they gave it a quick pull. And then 2-hour charts are great for spotting liquidity zones, guys. I always point these out. Look for the wicks, especially when there's a couple of dojis in a party there. Oh, look at that. Liquidity got grabbed. Same goes for the upside. You know, we got a big wick here. There's going to be some that are going to take profit on this little scalp here. So right in that return to mean, so to speak. Eventually, they'll melt through and they'll run measured moves. But in the meantime, this trend is going to chop a little bit, get some profit taking, some pullbacks. And, you know, it's pretty simple price action. Get into the daily and realize this is quite the parabolic curl here.
Oh, yeah.
And it's been repeated before. You know, the old adage, everybody's going to be chasing this dream. So this is where liquidity is going to be found. Some profit taking up on the upper range and some entries on the lower range. That's obviously where those liquidity zones appear. So if we start to go parabolic after a doji close on a daily here, that's where you make your play, after it breaks the range. I always say don't trade the setup, trade the break, especially if you're a newbie. If you've been around a while, you can trade the range of the setup and then have an advantage on the break, sure, but you're going to be taking some risk there. And if you're a pro, you know how to handle that risk. If you're a rookie, you don't know how to handle that risk, and you become somebody else's exit liquidity. It's unfortunate. So patience is key in this, and knowing what your limitations are as a trader are absolutely clutch when it comes to scalping moves like this. This is something that is uncharted territory. You don't really have a lot of history telling you what to do, but if you know where to look for your zones, you can just have the patience of a absolute bull. So
yeah, well, I'd say your measured move thing worked really well here. If you kind of look back at on the daily to the 5th of November and sort of start a measured move from there, you'll see, you know, if you end it right around the 90 spot where we went sideways for a while, the next measured move we halted right at the half level at that 101,586 area. And now 112 becomes, for me, the end of that next measured move. And it's, I think that's what we're looking really on track for here.
It's like the old 2-for-1, right in that limit. So we're pushing the 1.5 at the top of this doji here. So if we see a bar break that half mark, we should see a follow through.
Right to 112 is what I sort of have.
I've been switching my default color to purple, but it gets to be blinding when you go to zoom in on the 5-minute chart or something. So I gotta turn them gray. But purple on black just looks good.
Yeah.
Throw the green in here.
What are you, a Baltimore Ravens fan?
More like the Joker, purple and green.
There you go. I love it.
But yeah, you know that 110 is about half the move, and 112 to the extension, and we'd expect to see probably another bit of a wick, sort of like this one, right into that 112 target. So I'm gonna agree with you there. If things follow through for a full 2-for-1, man, it's a pretty easy shot to run to that. 117, 118.
Yeah,
that's on the mark.
You can see that by the inauguration.
Yeah, that's very likely. And you've got some of the old saber rattling in the background. I saw something where like Ron Paul was being interviewed about the end the Fed movement there. Could this be the beginning blocks to ending the Fed? I don't know, man. Trump's kind of on board with it. We'll see.
Yeah, I don't think they'll end the Fed. No. We'll see. But it is a worry. I mean, Steve Big Beat was interviewing Michael Litt of Big Short fame, and he did say one of the things you have to worry about is that he does prop up a pansy to be his Fed chief. And, that's one thing we've never done. The White House has never really been involved in that. The Fed runs independently.
Right.
The Fed seems to be out of the thing. It's the FDIC that's really in the crosshairs, in my opinion.
Right. And it's just, as I was saying, it's saber rattling. You get the hype.
Oh, yeah. Yeah, but we'll see. I don't know if it's so much saber rattling. Again, I think that he's going to do, he's got a mandate in his mind.
Sure.
So we'll see. It's a little different. And again, this is his last, unless he can change the Constitution, this is his last term.
Right. Yeah, that's probably not going to happen.
Yeah.
one side always accuses the other side of doing that anyway. So it's like, who cares anymore? Just trade the chart. The politics don't matter.
We don't. I don't care who's in the White House. I just want to trade the chart in front of us.
Exactly. We all know it's a puppet show anyway, right? Come on. Moving into a couple other things we were looking at. I think I'm still in the mining sector a bit heavier than I'd like to be, but SSR gave us beautiful move. I took some profit on that. I have a $9 target still on this thing. It gave us a pullback for half a block back, and if we print a doji today, we got a pretty good shot at getting a second chance to run that and finish that target. But this breakout move was a bit parabolic. It was a bit overhyped here. They went out and bought a bunch of properties from Newmont, and that money comes from somewhere. They pull it out of equity. So until those mines are up and running and producing and actually, following past their expense entry point, eventually they pay for themselves, and equity returns to the investors' pockets where it should be. You had that major sell-off back here from that incident in Turkey, of course, but they're not just in Turkey; they're everywhere. So, buying properties from Newmont, you would expect Newmont's equity to pop up, and I didn't see it, but it's got a chance of maybe if it gets above 43 a share, we could see it pull through. But for now, I'm going to scalp the one that's in the news, and we might get a second chance to grab this around $7.10, $7.05, I think is a floor there for the halfback, and maybe follow through with a shot. At least the measured move target is about 875. 950 would be the extension if it takes this entire bar back. Everybody's hopium chases that, so don't be a lemming on that boat, because you'll be someone else's exit liquidity, possibly some of mine. So, look at a little bit short of that, maybe about 920 at the extension rate on that. But I'm getting out at 9. That's my goal. I'm not going to push that any harder. As far as running this scalp back, my position is negative cost basis, so I could care less what happens to the rest of it. I might roll some out to March expiration. Other than that, I'm not really doing much with this. So it's been a ride, quite to say the least. A quick look at NEM real quick, though, just to kind of give you the idea of what we kind of look like here. I know Matthew doesn't care for NEM much, and I definitely see that obvious bear flag here. It's threatening to break that 39 floor here. I want to say that there may be something going on behind the scenes here, because I've seen this too many times where a bear flag will look like it breaks over and then all of a sudden it gets bought up. Look further left. Where does the weekly chart tell us? There's a range here, and we're right at the base of it. That was a measured move up. It came back. It's testing the mean. And if it breaks the mean, sure, we can short it. But until it trips over that wire, we're not messing with the short on this. We're waiting for this to range. If it holds 39 and becomes bullish again, 43 is an easy target for a return to the range top here. And if this consolidates for probably a couple months here before things start to shake out, and maybe they turn that cash into some income from selling those properties off, they might have a good shot at wheeling back out here and hitting the reversion target to like 48.60. But until then, we got to be patient with this. So pay attention to what this is doing. And then my better trade was in SSRM. And then the other thing to look at is, of course, GDX. That's going to be where your ETF trades are going to start to really play into that effect. But I think there's a major part of NEM in this thing, and that's going to kind of hold it back a little bit, so to speak, until it finally finishes out the move. You can look at gold futures all you want, swinging around. I watch platinum more than gold these days, but effectively, this could go either way from here, and you can see the same bear flag right here in front of you, breaking over, testing support. But again, look at the weekly chart. It's the same measured move. It's just choppier. So wait and see what it does with this pivot right in here, about 35.50. If it hits that and breaks it, cool, we can short it. But if it holds there and starts to revert, reversion trades are pretty obvious. I'll stick them in white. Mining is kind of a hit or miss sector for me. Sometimes I'll trade it, sometimes I won't. And back in the days of what was it, JNUG? That thing was insane to sell premium on until then it got delisted. I haven't even looked at if it even exists anymore. I don't even care. But those were the days when the volatility was great. Now, it's overplayed. And that's the same thing for GDX. I think it's going to just range for a while. Give us some scalps here and there, but nothing really significant I can see in the near future on this one, except for maybe a couple walks in that range. The other elephant that we're looking at, and this is kind of playing along with the Santa rallies theory here, is Amazon, man. I don't know if I want to stick another block on top of that or not, but dude, we got a primary into this whole trend here, so we may get another half move out of it, say about 252-ish. It's pretty reasonable. But it's already played all the moves that I had mapped out for it this year, and can it give me one more dance on the jukebox there, maybe? Yeah, possibly. Let's shoot for 252 because it's looking pretty bullish here. We got the bar, spinner, and the beginnings of a second weekly bar. So watch by Friday if it starts to push that target. Don't forget to take profit. Pay yourself, guys.
Absolutely.
You can't go wrong paying yourself, or you never go broke taking profit. I don't know. Take your pick. I do apologize if I'm missing the chat here. I'll get to it in a second here. I can see a few comments are popping in here. What platform do you chart on?
What platform you chart on? I use TradingView personally, but I know that you use.
I love TradingView, but I wish they had a darker black background in TradingView. It's kind of gray. And Webull, this is the Webull platform. It's a Webull desktop platform. It just has such beautiful looking charts. And I can agree. I get asked about it all the time. What chart are you using? This is awesome looking. It's Webull. I love Webull. I can sometimes even go so far as to pull the grid off and make it look cleaner, but this is just gorgeous. And I use it for my primary display because its drawing tools are like hands down the easiest and best drawing tools I've ever come across, even better than TradingView. I love TradingView. We are kind of affiliated with them over at the Bullish Bears. I do use TradingView for quite a few other things. I just primarily will use Webull for my explanations and display purposes. And TradingView, I do something else with. I love using a Renko chart on TradingView with a couple of secret weapons for indicators on it. And I go through those with my team over at BB, but I'm going to come out with a couple videos on how to use this a little later. So don't tune out. We'll get you.
Yeah, and I just, I learned on TradingView. It's what I always sort of use. They were one of the first ones in the crypto space, so it's a comfort level. Like you said, for me, trying to use Webull and draw, I'm like, I can't do it. But when I use, TradingView, I boom, 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 boom in 3 seconds. I can get from one to another.
Exactly, and I just, I guess it's also getting used to it. Plus, there are a couple of quirks with Webull. They don't give you this. They don't give you the possibility of putting up the full grid and stuff like this for a full screen view right off the homepage. So you've got to detach it from the homepage, drag it over, and you'll notice there's no full-size box up here in the right corner. I don't know if you can see that on your end. It's out of display. I have it edged here to hide my account number, but up the top, you have the dash, the X, and the box to full screen it. It doesn't have that, so you got to literally drag the corners out and fit it to your screen once you've detached it from the home screen. It's a little fun to mess with. I've got a video on our YouTube channel that explains how to do it. If you want to see that, it's in there. Just look it up. But other than that, I love it because it's such an easy to use platform for me. And you can trade on chart. You can do all the fun stuff that you want to do with any other brokerage. Pretty well the same, only a little bit faster.
We do have a question coming in, I see here, from a Brian D about JNUG. They are still in business, but like you said, very low liquidity there. You're looking at like 280 million in AUM, which for an ETF is rather small, under $1 million in daily volume. They are pretty illiquid. There's not much you can do there. That's the problem with some of these out there. Is you got to be careful. Make sure you're getting into the ones that have liquidity. GLD, of course, being the main player, is There's a reason everybody trades MNQ, and there's a reason everybody trades QQQ and certain things, liquidity. That's why MSTR is so great right now, right? Because it's got
Exactly.
the most liquidity.
That's it. Follow liquidity.
Yeah, there, Brian.
And
Yeah, I made that mistake as a beginning trader for a couple of years where I didn't fully understand, especially if you get into options, make sure there's liquidity in options. It's great. It's great to see something move 4,000% in a day, but if you can't find anyone to buy it, it doesn't help you on the back end.
nope, there's got to be a buyer.
Yeah, those prices look great until there's no one to actually buy. There's no exit liquidity for you. So yeah, that would be a tough one. This JNUG, I would not really be trading that.
I've seen a couple of them where like the bid ask spread is like $5 wide. I'm like, what? Not 5 cents, $5 wide. Nope, not for me.
It doesn't have a bad spread, but it's just that, again, if I compare it to gold, to GLD, although that's also not a 2, this is a 2X product.
Yeah.
But GLD has $73 billion in AUM.
And back in the day, JNUG was awesome. Yeah, it was.
Well, that's the problem. You and I were talking before we came in. These ETFs that have sort of a niche or are levered,
right?
They unfortunately tend to implode at some point because people just lose their fancy for them. You got to keep on rotating through them.
Yeah. It sucks because it changes like the winds of fashion, man. I mean, one day it's in season, everybody's wearing it, and the next day, no one will touch it,
Yeah, and what's the shame, like you just said, is that that's a Drixon. They're a great company, so it's not like it's a fly by night that you're trying to use that doesn't even in the business. But even Vanguards and these other companies, fighters, they'll roll off ETFs. They don't all work.
Nope, they don't always play. And we used to be able to like gauge SPY moves by laying an overlay average of the SPDRs and make some pretty good trend trades on it with that. Can't do that anymore because some of them just aren't popular enough to really give you a big move preemptive to anything. It's just all static at this point. I've even quit trading SPY and the ES almost altogether because it's just they're not correlating very well. It's not as efficient as it used to be.
Those disconnects will get you on a lot of those too. That's the other thing,
right?
That's worrisome on some of these is. Again, I come from the world of crypto, as I was saying to you before we came in, and there's a lot of like 3 long Bitcoin and 3 short Bitcoin, but they're done with algorithmically through computer, generated pricing. So if one goes up 10%, it goes up 30%. It isn't done through actual underlying assets like we see in these, and it costs a lot to pay analysts to do that. So the fees at those ETFs tend to get a little bit higher. So that's another thing that I want to warn people. Always make sure you're looking at that, especially if you're in those Bitcoin ETFs. There are some of them that have no management fees right now or very, very low management fees, and some as high as 2%. So
that's why I love being a self-proclaimed analyst. I don't have to charge anybody anything. I'm doing this for free. Come on now.
That's right. I just charge, for doggy treats for my pup.
There you go. That's it. Or I'll say something like, "Hey, go donate something to your favorite charity if I help you make money."
There you go. Even better.
Give someone a hand up. I like this comment. I was very grateful for this one. The Six Show says, "Thanks for the info, gentlemen. Trying to make 2025 my 10K year in the market. Awesome. And the information we provide is priceless. We appreciate that. That's the kind of feedback we love, guys. I love being able to help anybody, and that just that makes more appreciation from me than anything, really. I love doing this because it helps people, plain and simple. If I can help at least one person, I'm happy. And
absolutely, it's one of the things that I try to do every day at Quasar is get information in the hands of the retail trader that needs it. The institutions have such an advantage that we don't have. But what is coming is the democratization of that information. And, traders like yourself, Matthew, the other folks from Bullish Bears, Creed, and others that you have on, bring years and years of doing this. If you notice, we don't get very emotional when we talk about these. We might get a little excited, like anybody, but we don't get very emotional. And those are the things you start to learn. And you also see we don't enter a trade unless we actually have a thesis for that trade.
Yes.
I will stress that on Quasar all day long to people is if you don't have a thesis and you don't have an exit strategy for the good or the bad, then you aren't setting yourself up for success.
Exactly. As the old adage goes, it's just plan your trade your plan, rinse, repeat. If you can't stick to that plan, it's one thing, but if you can't even make a plan, don't even take the trade. You've got to have a plan both ways.
To hear it. I mean, you at Bullish Bears, you're teaching, hundreds of students at Prosper. I was doing the same when I was, doing a coach for them. And, everybody wants to come in and immediately start trading. And I'm like, no. You need to use paper trading for a few weeks or a month until you get it down. Because like you were talking to me earlier before the show, right? Some people couldn't keep up with your NASDAQ trades on the futures because they move so fast. And that's the one that I know. We had a short-term options room at Prosper where they do naked, options,
right.
weekly, the same, not 0 DTE, but within the week usually. And if you're not good at it, like I tried to do it one day and he had like 10 wins and I had 8 losses. and I'm trading with him. And I'm like, wait a second. Cause I couldn't move my fingers. You got to practice. You got to get your stuff
quick.
set. The same way as he works with trailing stops. If you're working with a coach that's teaching you using a trailing stop, there's a reason that he or she is using it. You should be also. Don't think you're going to outperform because you did once. You outperform the educator that you're going to do it on a regular basis.
Right. Back in the day when I first started, when I was more or less just a member of Bullish Bears and a contributor, I was writing articles and hanging out in the chats and stuff. And I wasn't like doing the live stream thing or the education thing for that matter. But like I would be in the room and they'd be trading SPY and they were looking at 2 weeks to monthly expiration options trading, and they're running 20 to 50% returns sometimes, just day trading. And here comes this guy. I'm running between 3 and 5 days. This is back when they had 3 expiration days, Monday, Wednesday, and Friday. And, I'm running 3 to 5 days to expiration typically, and I'm way the hell out of the money. Trading options that we're trading on that day from anywhere from 38 to 42 cents was my goal. I just looked at the premium price and I could already know what the delta and what everything was more roughly than anything. And just trade the trend. I'd trade the price action and I would go and scalp those out of the monies that were just at the edge of delta swings. So the delta would be really low, and then the next $2 move would bring that delta exponentially higher. That's what I was trading, because low delta moves against you slowly, whereas it moves with you fast because it exponentially grows. So I found the sweet spot to be about, at that time, 38 to 42 cents premium. Long story short, I was I couldn't make less than 100% on this. It was hilarious. Some days I'd have QQQ swings that would go 500% in that range. And I'd be taking screenshots of these and I'd post them up in the chat dude, how the hell am I doing this? I don't even understand this just yet. I was just kind of getting into day trading options. I had been swing trading options for a while, but day trading options was kind of new to me. I'm it makes sense for me to go into those low delta areas and scalp just the price move because exponentially it changes. Just look at the next 2 strikes. You figure out about what that'll be worth in that time. And typically a $2 move was 100% move on the premium price. So I was well, that's a no-brainer. I'm going to shoot for hundreds. And it would make a $2 to $5 move in a day, and I would do anywhere from 100 to 400% just day trading contracts. It was insane. You do those in blocks of 100 at a time, and you get some pretty serious returns. So it was kind of fun. They're hey, you want to be a presenter someday? Yeah, absolutely. So I did that for a while. I was teaching people how to trade options and price action simultaneously and working through that. And then just, Sid comes along. He's you should be a futures trader. I'm well, what's that? So to mess with futures, I'm holy crap. If I thought low delta to high delta swings was exponential, futures are a complete different animal. Yes, they can rip your face off and destroy you, but if you're in with price action and you're real nimble, dude, 400% doesn't hold a candle to some of the stuff I was doing in futures. And I scared the crap out of myself because I didn't realize what kind of risk I was taking when I first started doing it. running like
That's,
really small
that's
accounts.
a huge problem because people don't understand the leverage involved. That you're at 50, 60, 70, 80% leverage.
Yeah.
Which is, and the same thing in crypto, so you have the same, as you have that same high up to 100% leverage at places. And I would have students that wanted to do it, and I would ask them to do the math for me. Okay, so what will be your liquidation? And they couldn't figure it out.
Yeah.
I'm like, how are you going to trade this? Your liquidation's like a penny at 100%. It's basically a penny on $100 stock.
Yep.
So what are you, or a dime, excuse me, what are you going to do? Well, do you understand that? And they're like, no, wait, what do you mean? It's like, okay, if it moves in the wrong direction 10%, you're out.
Yep. And it's
They
that
took
fast too.
100% and you didn't lose a little bit, you lost everything.
Yep. And it's all, kind of I was the contrarian in that scenario. I was on the edges of where those options risk reward ratios would be. And I was out of the money enough to where some people would laugh at me like, why the hell would you even bother trading those? Like, you don't see what I see. I see the high low and I see the swing and I see the potential for exponential delta moves. That's what I was focusing on.
I mean, your PayPal one that we're in is a perfect example. Today it only moved up like 30 cents, and that thing went up 100%.
Yep.
And it's nowhere near our strike. Our bottom strike's 120.
No. Yeah, it's where the hell out there?
That's where I was like, wait a second, what just happened? I'm like, wow, how am I up this much on this? In this account, the only thing I think I have open is literally that. And I'm like, oh, hey, it moved from 4 cents to 8 cents. I didn't catch that. Let me see if I can actually get one of these to close, a couple of these to close, and they did.
And what's cool about that is you take your position and half it at that point. If you're not confident that's going to make it much more than 100%, but you still want to be in the fight, liquidate half of it. Your risk is free.
Like I said, I brought it down so that my price level is basically what I have left. It doesn't cost me anything.
Exactly. And then when a trade's free, your stress levels just fade away.
They go way down. I've noticed that. Yeah.
You sleep so much better at night when that happens. Yeah, it's pretty amazing. I mean, some of the stuff you can do with options that are fairly unorthodox to most everyone else. Those are the game changing moments that you can make in someone's lives when you teach them how to do it. It changed my life. I went from turning wrenches for a living, grinding my ass off 60 hours a week sometimes, to just trading for a living and shooting the breeze online when I feel like it, or live streaming to the students at Bullish Bears because I love it. I love helping people. That's where you've arrived when you're doing what you love, they say. So here I am.
Load it up, my friend.
So I want to take a quick flash look at Google real fast on this thing. Let me zoom way the hell out. So we were talking about this, I think about a month and a half ago. We were talking about this cup and handle look here, and the damn thing did exactly what we were looking at and blew through my self-proclaimed analyst target. It was just the previous high is all. Where Google goes next is pretty crazy because we're consolidating in a range here, and I think we want to see this as the primary from here to here, split that. Can you see 224 in the future on Google like I can?
Yeah, absolutely.
So, I mean, I'm looking at the previous measured move. The cup and handle is complete. The handle was right here. The breakout move, the measured move there was met. So, I'm going to borrow these, and they're the same size. They stack up. So I wonder if Google's got something in the cards with the whole theater of things to maybe in 2025 start approaching that 224, 225 conservative target there. Even after a parabolic move, it's still in business for it. And then break down to a 2-hour chart. We can see the bull flag kind of forming. This is wave 2 here. It's likely to come back to regression and test about 195 or so, and then we'll see if we can get going in a trend here. But this is where I'm going to start looking for it. And it's funny how Google kind of leads a lot of market share. So,
oh yeah,
when you take your eyes off of Google and it does stuff like this, and you go look back and like, well, no wonder I've been doing so good. So, now it's consolidating at a point where I think right by the end of the year, we're going to have a pretty big play come into next year. So either we get into that bull target or we start giving half back. Either way, we're into some good trades in Google soon, and big enough market share will move the rest of the market. and then start playing with Amazon and some of the other big players in that, and things start to really become easy to trade. So I think the swing traders are going to have a great year next year. I think obviously is going to be the ultimate conversation we're going to have here. So, it's starting to look really good.
Yeah. And with Google and the Willow chip there, now you're an AI player in a big way on the chip side, which, is a new sort of area for them. And then, Bezos is cozying up and gave $1 million to the Trump inauguration.
Mm-hmm.
And that's what you see in DC again, as you learn living here, is those fences mend very quickly that are out there, even with someone that's vindictive sometimes, like the president elect. He's willing to, if you come by in Mar-a-Lago, he's willing to talk.
Absolutely. And it's funny, they'll spend their entire position, bad mouthing the other side of the aisle, and then now you literally see them sitting together having a laugh.
That's what you do. In DC, that's what you see. You see the Republic. Do you see Bernie Sanders sitting with Ted Cruz? No, you don't. But do you see, your average Republican senator sitting with your average Democratic senator, and they're at dinner just on a social thing? Yeah, they reach across the aisles a lot more than you think.
Absolutely.
The rhetoric is terrible, but it's part of that is a show without
it
doubt.
is. It's a puppet show. We just trade the chart because it does move a little lot, and at the same time, it sets the stage for what's to come. And everything's starting to swing into 2025, looking pretty damn good in my opinion. As parabolic as we've been.
Asking though, is going to sell the news event is the beginning of next year.
Right.
I think, Brian, if you heard a little earlier, I do think you're going to find that right after the inauguration.
Yeah,
20th through the end of January. Because too many people will get expectations that the world will change on the 20th when the inauguration comes.
Right.
And it will take, weeks or months even for things to play their way through that matter to the markets. Certain things will change immediately. But the, loosening of regulations, stopping of lawsuits of FTC and things like that will take a little bit to catch on. So I do think you see the sell the news come the day of the inauguration, day after, is when I'll start to look at that.
Yep, that's when the pullback happens and we start looking for the bounce. We'll pick it up. There'll be some dip buyers coming into January for sure, and we'll be ready. In the meantime, a couple other things to look back on. There was one chart, I can't remember what the hell I did with it. It was a great call out. There it is, Bristol Myers. Back at my target again. This is the previous target I had here after that blowout. We hit the reversion trade. It's starting to shape up for maybe a consolidation and possibly continuation. Market structure hasn't really done anything with this move, but market structure was back here. There's your trend. Now we're in this giant broadening pattern, and if you were to stripe a regression line in the middle of this, Bristol Myers is one that I trade fairly seldomly unless it's got good action, and this is the action I see here. I'm going to put the regression line kind of right through here. You can see that it stopped here. If it breaks and finishes the retracement up here to the fib levels, so 72 is an extension target up here. That's a pretty big move, and the options will play nice with that. If it rejects here, half back's pretty easy too. You can go to 51, 52. So I'll be watching this one. I'm not taking a position on it yet. I'm just kind of watching what happens with this next part of the move. So we'll see. I'm going to be talking about this a little bit more next week, I think. And then coming into, we're still waiting for BTU to bounce, but we did have some contrarian thoughts on it last week. Now that it broke the 22 mark where we're looking for the swing back through 23, we looked left and realized, hey, wait a minute now. Trump was very big speaking about coal. He was like, I want to bring coal back and all that stuff. And the whole thing just absolutely plummeted through his whole presidency. And here we are again. We're right in the middle though. Could this be a decent short instead? That's very possible. And my God, you break $20, it's a pretty fast ride down to $2 again. So pay attention to this area here. If it starts to break the support area, we're going to start looking for some shorts instead of longs. And, we can talk and say we're bullish on coal all we want, but the chart says otherwise. I think we could be in for a surprise on this thing, and maybe we do take the plunge. So and
We'll see. Yeah, we'll see for sure. I think that he definitely, the Republicans realize that the rural vote carried them very much, and
yes,
coal is very much a play for the rural part of the country. So you could see a little bit more action this time than maybe you saw last time. So we'll see. And he made it clear in talking the other day, we need twice as much electricity as we currently produce.
yep.
So
And
you need to have ways you can get that.
it's hard to rush nuclear. You can't. It's going to take
You
about
can.
10 years to build out.
Yeah.
Unless they can do no, there's another portable reactor thing. That's where the little small stuff starts to make sense.
Yeah.
Where we're playing with some of the other big nuclear names. But Geo is natural gas, and that's kind of getting a flag going here. So we have a pretty good shot. That's one hell of a measured move, guys. If this thing absolutely breaks out of a bull flag from here, damn, that's a massive candle.
Yeah.
Even half of that move is psychotic, right?
Yeah.
Don't take your eyes off of Geo, man. It's just consolidating here. It's holding its own. If it holds the support area and starts to get a grip here, we could swing that up to $34 pretty damn quick. Can it extend even higher? Maybe. Just don't take your eyes off of it. There's some nice plays to be had on this one yet, and I think it'll start shaping up towards the end of the week here. We might see it hold this area and start to swing into a trend there. Very cool.
Yeah.
But there's a few others out there, and I think the theme's going to kind of carry on. Natural gas is going to be the fastest way to produce the amount of electricity that AI is going to demand. And then there's the whole, we could be, what was the word? Deregulating Bitcoin to where it can be free to just be taxed as general income. That'd be pretty awesome.
No, not even general income, no tax.
And no tax, even better.
Currency.
Yeah, the currency. So
Yeah.
that's going to take a lot of electricity, though, because that's going to be a whole lot of transactions to validate. That's going to be a whole lot of mining taking place. That's going to be
Data centers. Crypto mining companies have a lot of energy they already pre-bought during the last bull run that they have long-term contracts. So they're sitting pretty well. Your Maras, your Clean Sparks, BITF, some of the others. So they're doing okay. It's going to be, it's all the other components of AI building, to build an Intel factory, to build a Micron factory, to build a TSM factory here. Those are the things that are going to take huge amounts of, energy.
Yeah. I'll take a look at Baba in a minute here. Let me type that out. But the other thing I'm thinking here, and environmentally, the big concern with natural gas was like, they were pushing measures to take gas-powered stoves out of houses and stuff. Come on.
Yeah.
But
they did that in New York City. You can't get you can't use gas for your oven.
I would just move. I can't cook without gas. I can't cook on electric. No way. I like to cook really good meals. I don't mess around. I'm not a chef by any means, but at home I am. So, but long story short, when it comes to natural gas, it's much more dangerous for the environment when it's not burned compared to when it is burned. It is in itself the worst greenhouse gas you can have. So environmentally, it's more sound than burning coal, burning crude oil. Any of those. Natural gas is kind of the way to go. 1, 2, it's abundant. Natural gas is literally a byproduct of producing any other petroleum product. It's often just flared off as just waste. I remember, back when they were having storage facility issues that they couldn't give the stuff away. They were, in the verge of possibly paying to get rid of it. So, natural gas it can be pretty freely ramped up in production quickly. It can be consumed to generate power very quickly. Even coal power plants can be converted to natural gas very quickly, and it can be moved, yes. So, in my opinion, I think that's at least going to be the stop short before we get into the full nuclear swing of things for all the energy that's going to be required for all this stuff. So, don't take your eyes off natural gas. But then again, also be aware that the price of natural gas is going to be the key. You can't have a booming economy without affordable energy. So if as long as they don't ramp up the price of natural gas itself too fast, we should see some good swing from the utilities that convert it to electricity and then provide it to all those data centers that crush all this electricity or use all this electricity to do the things that they do. So in contrast, you're going to see some big moves in energy that are going to make sense after the fact. We're going to start seeing things after inauguration start to swing in the energy. And this consolidation is not to be ignored on Geo. This is looking pretty damn good. And there's other natural gas equities and ETFs that we're looking at as well. So be on the lookout. Let's take a quick look at BABA buy request here. That Chinese stimulus package, man, that keeps getting. To me, it seems like someone's kind of pulling the cords on a puppet string, so to speak.
I was going to say my call on BABA, where you're sitting pretty good, probably with a February 21 call there, is that expect to see a stimulus package announced when liquidity is low, either next week or the week after. That's what they're famous for. Stephen Flanagan, a 35-year Forex expert from JP Morgan, that it comes on Quasar Monday, Wednesday, and Fridays, has made it clear to watch for that. So you're probably sitting in a good spot there to watch it bounce back on that situation. He did point out, though, that none of the stimulus packages ever do anything.
Right. Yeah, it just ends up.
They're good at announcing them. They don't really tend to have follow through. So that would be if you do see that pump, you take some profit.
For sure. And, I was pointing out there is a measured move possible here where we go a little lower. That does have a fishy look of a bear flag here. And there was the liquidity pop right there. So this is the part where it's critical. And the next few days, we should see a swing above or below this range bar here. And if we see it below, we typically like to take and dissect what everyone else sees as a double bottom into it could still be a bear flag scenario. So I like to mark the high, the low, and the mean on every time I see a double bottom like this, because I am always skeptical. And I know that everybody and their mother sees the same chart. So when we can't breach R1 after a pop like this was very fast liquidity grab here. If it rejects here and breaks back through the mean, it's likely to hit that first low. And that's it right there where the 200-day moving average is, oddly enough. If it breaks that, we get a bearish measured move, and all the stimulus in the world couldn't save that. It'll pop down and hit support to the next levels. But if it bounces anywhere in here, yeah, we got a mean reversion right here. 96.07 is about the middle of that trend, low edge, middle. I'll bump it up to my measured move split. Let's say 98. If it bounces above this resistance here and we start to break out as if it is an actual double bottom or triple bottom in this case, and we start to find some momentum, sure, it'll hit that reversion target pretty readily. It's going to depend a lot on what happens in the global scheme of things too, because you also have some issues in Asia that are not resolved, and they're just kind of floating along. No one's really, taking either side. No one's really making it either direction. It's just back and forth, tit for tat stuff. So chart goes sideways with that. Wait for the break. Eventually something either good or bad will happen. So if you're trading BABA, wait for this level. This range will break one way or the other, and it's coming soon. I think probably the next couple of days we'll start to see it shake out. In the meantime, short-term liquidity, you can see where all the wicks stop are pretty regular in those ranges. It's easy scalping, but hard swinging. So wait for the range to break before you swing, or scalp the range while you wait. You can go either way on that. And then BABA and JD is probably about the same chart. I think I'd imagine here. Yeah. Pretty much the same thing, only it did find the bottom. This is in the liquidity grab phase of the same chart, essentially. You can see the primary, secondary measure moves done. Yeah, I'm going to be a wait-and-see fan of China for now, and we'll see something soon. It's looking like things are getting ready to break. One of the places, I used to trade FXI regularly, but it's just been such a dog. But you can kind of use it as a canary in a coal mine at least. So same chart, measured move down, bounced for liquidity. Not a double bottom though. This one's a little different. It's maybe eking out a reversion to 31 or so. maybe, but it's such a rough chart to trade. I mean, look at this. That's the daily candles.
Good Lord.
Back in the day when I used to scalp this thing, it was fairly easy. I think it was like 2018 was my heyday with this thing. Good Lord, that's way back. Oh, there it is. Massive triple top, and it broke down. We were shorting the crap out of this thing. And then back even before then, same scenario. Just big old top. If you zoomed in on this, it'd be a nice triple top break. Those were some great shorts. And it just ranged and then broke again. I mean, just a gravy chart to trade back then. Now, not so much. Just choppy garbage. It's one of those ETFs that kind of lost the liquidity, similar to JNUG, only this one's not leveraged. It is what it is.
All right.
Anyway, I think that's about it for the day. Not a whole lot of call-outs to be made other than we did have our accuracy at like 96% from last week. So we didn't get 5 weeks in a row 100%, but 4 weeks in a row 100% was pretty awesome. We had some things follow through, but some things fell short. So we were just kind of waiting to see if we got the 5 week in a row. Damn it, didn't make it. But you know what? We still did pretty good anyway. So stick around, tell your friends. We're all about accuracy here. We're all about finding the easy charts to trade and following through with putting out some price targets on them. And we all trade these together, and we all do very well on them. Yep. We'll just join the club, guys. We'll see you next week. Thanks again.
Thank you.
Hello and happy Monday, everybody. Hope you all had a great weekend. Here we are back at Market Minds. So thank you so much for being here today. Can you all see and hear me okay? I am not on the floor behind me. I will be back there in a couple days. I am not on the floor today. So hopefully sound is a little bit better. Guillermo, how you doing, man? Another rough one for us Bears fans yesterday, that's for sure. It's just getting really, really old. Really old. It's pretty bad. So market, for the most part, pretty quiet today. The NASDAQ is down the most. Let's see. Qs just took a leg lower to their low of the day. Russell is near the flat line. S&Ps just took a leg lower. They're down about 27 right now. Overall, not a heck of a lot going on. If we look at kind of the breakdown of the market, the Dow is near the flat line. We're really just seeing tech getting hit today. NVIDIA is down 2+%, traded right down to its 50-day moving average. Bitcoin's under pressure. just a little bit of profit taking. But this is the time, well, it's always the time to look for protection. It is always, always the time. But right now, folks, we have got to look to hedge our portfolios. Okay, we always look for that. We always talk about buying when you can and not when you have to. And this is exactly what that means, is buying that portfolio or position protection. Okay, when you go out and you go shop for your auto insurance, homeowners insurance, when do you want to do that? You don't want to do that after something has happened. You don't want to do that after an accident, because then your premiums are higher, right? Well, same thing in the market. You want to get that protection when it is cheap. And you know what, folks? It is really cheap right now. It is really cheap right now. In fact, the portfolio protection that you can get in the S&Ps right now, okay, it's the cheapest it's been. It is the cheapest it's been, with the exception of 2 times in the last 30 years. Okay, even with a little bit of a, of a dip today, and vol is up a little bit today, not much, it is the cheapest in 30 years. And you always hear me harping on this about buying the protection when you can and not when you have to. Okay, and that doesn't mean that you have to be bearish. It doesn't mean that you might think the market is going down. It's just a part of trading. It is just a part of managing your portfolio, whether it is managing your trades or managing an IRA or a long-term portfolio. Okay, and quite frankly, if you buy that protection, you know what the best thing is? That you never use it, right? That's why you want to get it when it's cheap, and you hope it goes out worthless. Okay, how many of you would give up, just a small amount, a basis point or two, to have the peace of mind that you're going to be protected if something happens in the marketplace, whether it's days away, weeks away, months away, whenever it might be. And then, okay, I've got that protection. I paid for it. It was cheap. It goes away worthless. Okay, which means the rest of my portfolio either maintained its value or even increased in value. Okay, VIX on Friday closed at its lowest point in 5 months. I know we're going into the last 3 weeks of the year, the Santa Claus potential rally, where, historically the markets just trend up. Okay, and the Santa Claus rally just